Auction numbers are down in Sydney. Why is that?
Well, interesting, isn't it? We all know that the Sydney auction market cooled over the end of spring. December clearance rates were down to their lowest level since December 2015. I think the market largely ran out of puff. I think there's maybe a little bit of trepidation from sellers starting the new year. Got to remember that 2015 market where clearance rates actually tipped under 60% through December. The market rebounded in 2016 with clearance rates at nearly 80%. Now, I'm not predicting that to start the year this year, but I do think that as numbers grow, we will continue to see demand outstripping supply in the Sydney market. I think the days of 80% plus clearance rates are behind us overall, but I do think it remains a seller's market, particularly in those inner suburban, higher priced regions. But it's all before us. The new year is upon us, and we will, watch it with bated breath to see the results as they come through.
Absolutely, which probably leads us into looking at what the auction listings are for this first weekend in February, and how do they compare with last year?
Well, look, reasonably similar in most of the capital city markets. Sydney's the outstanding change, being considerably less than the same first weekend last year in February. It is the lowest first weekend for numbers in the Sydney market since the beginning of February 2014. And that was actually the 1st of February. So maybe if we take into account that was more January than February that year, it's quite a low number, but other numbers are reasonably similar to where they were a year ago, with interestingly the Adelaide market with some big numbers coming up this weekend, but Melbourne around about the same for Brisbane, the same for Canberra. Of course, numbers will build as the weeks move on and we head into autumn. We will see a higher proportion of higher priced inner suburban properties being offered, and I guess the energy in the market will reveal itself sooner rather than later.
Yeah, and looking back to the end of 2017, how did it finish up? And where was the tipping point, do you think? When did we go from a boom into a slide?
Well, I'm not sure. Well, it wasn't a boom. Well, I guess you're right, it was a boom to a slide. But there are a number of factors last year. Of course, we had interest rates are a clear driver of what happens in the housing market. We haven't had an interest rate change since 2016. Last year we didn't have an official change in interest rates. But we did have some changes happening as a result of those APRA actions. The regulator wanted to tap investor activity. We saw higher rates for investors from mid-year. We also saw lower rates for owner-occupiers to offset that. So I'm not sure they had a strong effect on the market. I think it was just buyer fatigue. We do see that moving as spring progresses. It becomes more of a buyer's market. Stock numbers rise. It's the old truism that, you buy early in spring and sell later in spring. And I think that's what we saw in the market generally, it's particularly in Melbourne and Sydney. Higher stock numbers pushed those clearance rates down, seasonal effects, and maybe some impact from higher interest rates for investors as well.